Any plot of land, whether or not it has a building on it, encompassing everything from farmland to an apartment complex, is considered real estate. Everything that is inextricably linked to a piece of land, such utilities or roads, is referred to as real estate. Also, this includes the many rights that accompany a piece of land, including water or mineral rights. It's likely that the definition of real estate is larger than what you initially thought, but it's still crucial to comprehend how each of these factors affects the price of real estate. Hello everyone, and welcome to a brand new video on the channel. Today, we're going to talk about Real Estate Investing 101. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. What is a real estate investor? A real estate investor is a person who purchases, sells, leases, or rents real estate with the intention of making money. Many real estate investors combine one or more of the many available real estate investing strategies to create the desired portfolio. The term of real estate encompasses far more than you might originally imagine. As I said above, real estate investors are subject to the same rules. This might apply to everyone who owns undeveloped land, buys and sells in bulk, flips houses, rents out commercial property, and more. Risks of real estate investing. It's critical to realize that investing in real estate has certain risk, just like any other sort of investment. The specific risk relies on your market and strategy. The biggest danger is typically a loss of income or assets. Fix and flip in the event that projects do not go as planned. Investors run the danger of losing money, while landlords run the risk of having vacant units. There's also a certain amount of risk associated with other real estate investing strategies, including REITs or crowdsourcing websites. If the market declines, investors might observe asset depreciation over time. While there is no way for a real estate investor to totally avoid risk, there are strategies to be cautious and reduce unforeseen losses. Why should I get started investing in real estate? Getting into Real Estate 101 and looking into the fundamentals of real estate investing can be a wonderful approach to get your feet wet if you agreed with any combination of the statements above. Building riches through real estate investing is a successful job or side hustle. To be successful, it will need your time and investigation. If you're concerned about the amount of personal capital required to start investing in real estate, you should know that it is feasible to do so with little to no money. Learning about the numerous financing options, such as how to invest in real estate with no money and terrible credit, is a part of Real Estate 101. Prior to beginning, it is crucial to consider and determine your financial and personal goals. Due to the size of the real estate investing industry, it is simple to lose direction if your goals are unclear. You will increase your chances of success by being conscious and coordinating your investing tactics in a way that will help you realize your vision. There are some significant advantages to take into account if you're still not convinced why you should start investing in real estate. Real estate offers a special blend of benefits, whereas most investment kinds may guarantee some level of return. Control. The power to manage one's own portfolio is a major draw for real estate investors. While some amount of commitment is required for other investments, you will probably be relying on a portfolio manager or financial advisor for day-to-day tasks. Investors in real estate can choose how much or how little participation they desire. Tax advantages. Real estate provides investors with unheard of tax advantages. First, rather than being taxed as employment income, investment property income is often taxed as capital gains, resulting in a lower tax rate. Along with several tax breaks, real estate also provides advantages for rental properties and even depreciation. Make sure to read this tutorial if you want to find out more about the tax advantages of real estate investing. Leverage. The most prosperous real estate investors of today have achieved their success through the use of leverage. Leverage in real estate refers to using borrowed money to buy new properties and expand your investment portfolio as a result. Understanding how to use leverage effectively and controlling the risks involved with putting your assets on the line are essential. Hedge against inflation. Real estate is one of the finest hedges against inflation, says Nate Sang, founder and CEO of Wall Street. Those who own tangible real estate will gain from rising prices through increased rent or appreciation. Varieties of real estate investing. It won't make you financially bulletproof, but it goes a long way toward wealth stability, says Sang. The majority of investors will begin their portfolios with one of three basic forms of real estate. These are excellent areas for beginners to start, even though they are not the only ways to generate money through investing. To learn more, examine the following forms of real estate investing. Real estate wholesaling is a well-liked method for people to break into the industry because it needs little to no personal cash. The investor acts as a middleman to link vendors and buyers throughout the wholesale process. A wholesaler will often first locate a property that is being offered below market value and make arrangements for the contract to be transferred to another buyer, like a rehabber. With the help of a service fee, the wholesaler generates revenue. Either that, or they'll perform a double close. Buy and hold. Buying property with the intention of holding on to it for a long time is known as the buy and hold strategy. Property can be sold when the market is most advantageous and is probably going to increase in value over time. Many investors choose to generate cash flow in the interim by renting out these homes. Rehabbing. During the past few years, reality television programs have greatly increased public awareness of rehabbing, sometimes known as fix and flip. In a perfect scenario, an investor would buy a run-down property, put money into fixing it up, and then sell it at or above market value to make a profit. New investors should be aware that this approach does involve risk and necessitate a substantial level of expertise, diligence, and patience. Real estate investment companies. The majority of properties are really owned by real estate companies, which also dominate the investment sector. These enterprises are organized as conventional corporations, LLCs, and other legal entities. Real estate investment companies invest in real estate similarly to an individual investor, while also offering the owners and shareholders a number of legal and tax advantages. Companies that invest in real estate may hold residential, commercial, and mixed-use properties as well as undeveloped property. Larger corporations can essentially execute whatever approach a lone investor can. They have more capital, more agreements, and higher profit margins per year since they operate on a larger scale. While some of these firms are enormous corporations, others may be little, neighborhood partnership. The legislative framework and ensuing tax status serve as the true deciding factors. Real estate investment for novices. Common errors. While examining several potential outcomes for novice real estate investors, it becomes clear that practically all errors are caused by a lack of planning or research. For instance, it's a typical error to believe that the area where you live will be the best for investing. Instead, take the time to thoroughly investigate various areas and base your decision on important factors like nearby schools, employment rates, job development, and typical rental prices. For your specific type of investment property, make sure you strategically choose your target market. Another typical rookie error is to make a hasty purchase only because a property is being sold for what seems to be a fantastic price. In this circumstance, a lot of things could go wrong. Investors should make it a habit to perform their due diligence and run their figures to ensure that the deal will actually result in a profit at all times without fail. It's a good idea to schedule a property inspection before finalizing a contract in order to, as accurately as possible, predict potential costs. These two common errors should serve as illustrations of how an investor's lack of due diligence and study can result in their own ruin. Understanding the fundamentals of real estate investing should place a strong emphasis on thoroughly researching markets and deals in order to make informed, calculated judgments. That's a wrap on the video. I hope you liked it. If you did, let me know by giving it a thumbs up and do not forget to subscribe. Thanks for watching. See you next time.